Hey guys, welcome to the channel. In today's video, we're going to discuss how to analyze a deal accordingly in 2023. I know things have changed in 2023. There's a lot of current events, a lot of news with the interest rate and with the feds. So this video is going to help you guide you in how to analyze a deal in 2023. So without further ado, don't forget to like, subscribe, and let's get started. So 2023, there's a lot of news on around real estate and interest rates. So let's go ahead and unpack all of the news that's been happening with the bank's failure, First Republic, and the interest rates rising. What does it all mean for a real estate investor, and how can you better analyze a deal and make sure that you're investing in a property that will make you money and not lose money? So with that being said, when you're analyzing a deal in 2023, you'll have to consider several factors, right? One is the rising interest rate, right? Since the beginning of the year, interest rate has been going up almost 3 points since then. And what this typically means is that the cost to borrow money is higher. So if you were able to finance a $500,000 house for $2,500 a month in payments last year, when the interest rates were 3% and lower, now that same $500,000 loan is going to cost you double that, right? So almost $5,000 a month approximately. So with that being said, rising interest rate is going to factor into your when you're analyzing a deal. You can't use the same factors and same calculations that you were using last year. Very important as a real estate investor that you are aware of the interest rate and all of the current events, so that you can make an informed decision that will not jeopardize your financial situation, and so that you can turn a profit. The other part is a recession. The recession is upon us, whether the government admits that we're in a recession or not. We're in the middle of a recession. There's companies are laying off a lot of employees. There's going to be a rising unemployment, which in turn there's going to create some certain level of fear in the market from a buyer's perspective. Couple that with the rising interest rates, this means that it's going to be a lower demand, which brings us to the third bullet point: lower demand in real estate, right? Less buyers, less people in the market to buy a house, which creates less people that are willing to purchase your property if you're doing a flip or trying to sell one of your investment properties. So all of these things are factors that you need to consider when you're analyzing a deal. Last year, when you were selling a property, there was so much demand that people were fighting. It was a bidding war to purchase your house. This year, not so much. It's the opposite, right? So what are the things to consider when you're analyzing a deal? One, higher cash flow needed. Meaning, when the interest rate going up, that same $500,000 deal we just talked about that was going to cost you $2,500 in loan repayment every month, now it's $5,000. So that $2,500 extra is coming out of your cash flow. So if you're purchasing a property that you were hoping will cash flow $2,500 a month, now that the interest rate has doubled essentially, your payments almost doubled as well. So yeah, that whole cash flow is gone. So when you're analyzing a deal, make sure that you're considering your higher cash flow than you did last year. With higher payments means less cash flow. So you have to make sure that you account for that higher interest rate and higher payments when assessing a deal. The other part is, if you're flipping a property, you have to be aware of the longer days on market. DOM is days on market. So how long a property sits on the market for sale. So you list it today, how long does it take it to be under contract and sold? And that number of days for a flipper is very important, because you're holding that property while it's listed, right? Whether you're paying a high interest rate, hard money loan on it while it's listed, or you're just tied up your money, your cash into that deal, you have to take that into consideration. So factor that into your profits. So if you're factoring in 20 grand, 30 grand, 100 grand in profits, make sure now you adjusted accordingly, because it's going to probably take you longer than it did last year. Last year, properties were selling one day after being listed. Sometimes there will be already a contract on the property before it goes on MLS. Those days are gone for now. This year, the market has changed, so we have to adjust accordingly. And then there are bigger issues in multifamily. Multifamily is facing the biggest risk right now. If you're holding multifamily property, multifamily, especially commercial multifamily, are affected greatly with rising interest rates because they typically have a shorter term, meaning in multifamily they have anywhere from 2 to 5 year fixed rate, and then it adjusts, or there's a balloon payment. So they typically have that type of term on their mortgages. So what that means is that if you're getting if you're purchasing a multifamily deal, make sure you take into account the interest rate, the uncertainty around the interest rate. It may rise in the next 6 months another point, right, which will greatly affect your cash flow. And in a multifamily deal, cash flow is everything, right? You're buying your cash flow, your net operating income that has a direct correlation to the value of the property. So if you lose 20% in cash flow on your multifamily commercial deal, you're essentially losing a big chunk of the value of the property just went down with that cash flow decrease. So keep that in mind. Very important when you're analyzing a multifamily deal, that similar to what I said with the higher cash flow needed for both residential and multifamily, but especially for multifamily, you have to take into consideration the interest rates, right? Interest rate changes. And again, 4% cap rate might have been fine last year. Well, this year, 4% is not going to cut it, right? You're probably going to have to look anything above 5%. So with that being said, multifamily is probably going to be, like I spoke about it in another video. Commercial multifamily presents the biggest opportunity in 2023 and 2024, as more of these mortgages that have a fixed rate that is coming up. They refinanced or purchased in the last 3 years when interest rates were low. They're going to be stuck because they have a mortgage that they purchased, or multifamily property that they purchased or refinanced during a low rate that has since doubled, and that's going to greatly impact their cash flow, which will greatly impact the value of the property. So you can probably purchase some of these deals for a very good price, but let's see how that turns out. That's where the biggest opportunity presents itself right now in 23 and 24. Be on the lookout for that. So with that being said, these are just some of the high-level points that I wanted to point out, guys. As you're assessing deals, just make sure you're considering all these factors. There's a lot of talk about waiting for the right time to invest. The truth is, every time is a good time to invest in real estate. As long as you know and understand the current market and how it is, you can always make money. You just have to be very educated and aware of the current cycle that we're in, right? And understanding that can be the difference of you making money or losing money. But it's always a good time to invest in real estate. You just have to be informed and educated. All right, with that being said, guys, thanks for watching the video. Don't forget to like, subscribe, and comment. And until next time, take care.